Welcome to the Aquest Podcast, conversations about regs, funds, and governance with your host, Daniel Lawler.
So it's January 2018 as we record this. It seems like a good time to look forward to what the new year might hold for the funds industry and financial services generally. Maybe we start with looking at where we are at in the regulatory cycle. So about 2 weeks into the new year, we've already had 3 new regimes come into effect. We've had one for the benchmark regulation. MiFID II has taken effect. And the PRIPS regulation for packaged retail products has also come into effect. So feels like there's still lots of regulation and lots of change on the way. And even from now to the middle of the year, we also have the GDPR, the General Data Protection Regulation. We have the effective date for CP86, which is the Domestic Work and Fund Management Company Effectiveness. And the EU Money Market Fund Regulation comes into effect in July. So feels like there's still lots of change and lots of work for the legal and compliance teams on the horizon. Is that a fair assessment?
I think it is fair. I think the good news is that in terms of the regulatory cycle, I think we're probably more than halfway through and probably 3/4 of the way through the regulatory cycle. There isn't any imminent or very large piece of new legislation being considered and being drafted and proposed for implementation 2 or 3 years down the line. I think we're in a phase of what I would call implementation and active supervision, where we're seeking to address how all of these new pieces of legislation that have come in the last 2 years how they've actually been applied in practice. I think that's really important now. And I think the focus is very much from a regulatory perspective on supervision. So if you think of ESMA's agenda, they're very much looking at supervisory convergence and how we're working well collectively to supervise the sector that we are all responsible for. I also think it's very much in the phase of maybe testing how robust and rigorous our current model is. So you'll maybe see changes coming down the track around AIFMD2, but nuancing particular areas such as maybe reporting, or you're looking at the fit for purpose of maybe the likes of EMIR or of our UCITS regime, etc., that it's not going to be a massive overhaul of legislation. I think it's really any new legislation that you'll see is probably seeking to enhance the framework that we have already there.
So a period of review, a period of looking to see how well the different pieces of legislation knit together and maybe to try and iron out some of the problems where the two pieces didn't quite join up as they should, which is fair enough and ought to be very positive, because maybe it firstly fixes any kinks that are there, and secondly maybe gives industry a chance to do something other than try and catch up with regulatory change, which is product innovation or process innovation, whatever it is that they're working on. You mentioned that convergence and supervisory convergence and review is probably the order of the day, which probably leads us into then the ESA review. So the Commission published their proposals for reviewing how the European supervisory authorities are working in September of last year. And there was some good stuff in there, and I suppose there was some stuff in there that was a bit surprising, and I guess on your side probably a bit of a head scratcher in terms of how that would actually work in practice. And the two I particularly have in mind is proposals that ESMA, which is the European Securities and Markets Authority, would begin to authorise 3 different types of funds: venture capital funds, UVECAs, social entrepreneurship funds, UCEFs, and long-term investment funds, LTIFs. And the second then is around opining on authorisations that involve a lot of delegation. On the first one, is that about authorising UVECAs and LTIFs and UCEFs? Was that something you guys were expecting? Is it something that you think will sit well, or is there stuff there that you think, how is that going to work?
I think it's very much how is that going to work. I think the first concern I would have is what's the motivation behind it. And you could, from a practical perspective, will say we don't have that many fund types in our jurisdiction, so if ESMA want to take a greater role in terms of approving this particular type of fund for a particular reason, that's fine. But I guess my concern would be around why they'd seek to introduce such a proposal, and I suppose how adequately equipped ESMA are to actually facilitate such a proposal. I mean, I don't think we're unique as a regulator in that we have well-established service standards with our industry in terms of speed to market and turning funds around pretty quickly in an authorisation perspective, and we've well-established procedures in terms of facilitating that process. So it is a little bit strange, I suppose, is probably too strong a word, but it's a little bit puzzling, I would say, around the motivation behind it and why they'd seek to actually look at this particular type of fund. And I suppose that the next question in my mind might be, well, what's next? Will they seek to look at maybe particular types of UCITS structures or particular AIFs that are maybe targeted towards a retail investor? I don't know is the honest answer.
See, what I don't get is the uptake has been low on those three regimes, fair enough. And the proposal frames that are around part of the reason for the low uptake is a lack of convergence at European level and different national rules. I don't know. I didn't really get that. I think that there has been a slow uptake because maybe the interest just isn't there. The appetite just isn't there for it. It was designed to be a regime that would allow smaller managers a European passport for particular types of funds. And I said, I don't see that a lack of convergence has been the reason for it. The original regulations were reasonably straightforward. Amendment regulations have come out and they make it more complicated, which isn't going to increase the attractiveness of the regime, particularly if it's for smaller managers that don't have the legal and compliance resources. And in the ESA proposal itself, there's another suite of amendments proposed to those pieces of legislation and a raft of level 2 measures, which are going to make it even more complicated again. So I don't know that bringing it to ESMA is going to increase the intake when you increase the complexity by a huge amount. You're right, though, because, authorising funds is a different skill set. It requires different staffing levels and different levels of experience. So they're going to have to recruit in for that, presumably. And for three regimes that don't have a lot of funds, it does beg the question, well, what's next? Because, is it credible that they're actually just going to recruit an authorisation team to authorise funds that there aren't very many of?
No, absolutely. And even if you think of it, there's many fund jurisdictions right across Europe that have many hundreds of people involved in this process. So the sheer scale of it from an ESMA perspective has to be frightening, to be honest, in terms of actively engaging in this activity and delivering, I guess, to at least a standard that is expected right across Europe currently, within the time frame. Exactly. I think that's really a challenge. So it will be interesting to see how that debate evolves over time and what it really means in practice.
Yeah.
I think
the second one that I was interested in was the piece about the delegation. So the idea that ESMA will opine on authorization applications where there's a lot of delegation proposed as part of the business model. Again, is that one that you were expecting to see? Is it one that you can foresee sort of questions and issues around how it might work in practice?
I have to be honest, I was quite surprised with this, because if you think of investment fund law, they have very clear rules around delegation, and under AIFMD we have a very strong model of MOU structures, particularly with third countries, which allow and facilitate, I suppose, supervisory cooperation and jurisdictional assessment in terms of third country delegations. So this I was quite surprised, because this is stripping out, as it is currently suggested, a component of the authorization process, and I'm guessing it's if you look at a fund authorization, you also look at the delegation arrangements by the AIFM to whomever and whatever they decide to delegate to. And this one really baffles me, because do you assess delegation prior to accepting a fund authorization? Do you bring the fund authorization to near completion and then you wait for a view or an opinion from ESMA on the delegation arrangement to some third country, Asia or in the US? I really struggle here as to how both national authority and ESMA will marry, I suppose, this process and not unnecessarily, I suppose, upset the apple cart in terms of the authorization function. I think that this is really difficult, and whether ESMA will consider jurisdictions collectively or will they consider individual delegation arrangements? There's so much up in the air on this. I find it quite baffling, to be honest.
The thing that I'd have a question about is, how does ESMA form its opinion? Because the mandate of ESMA at the moment is very much around, obviously they're sort of a secretariat to the member states, and they're a policy and a legal team, and they formulate recommendations and opinions and guidelines. It's quite a different skill set then to move from a policy kind of a role to authorization and supervision. So, if I were a policy person and I get an authorization application, I can advise on whether the application is in line with the policy intention, is in line with the laws, but whether it's appropriate and whether it's balanced, there's a different skill set, and you need an authorization and a supervision team to make that determination. So how do you do that without an authorization and a supervision team? You either recruit them in, which perhaps is the solution, but again, you're recruiting a team to opine on other jurisdictions' authorization applications. Don't know what the volume is like, don't know what happens with the opinions when they're issued. Or else, if you don't have that resources there, then do you look to your legal team to try and opine on it? Now, much as I love investment fund lawyers, and I am one myself, we're not the people to make decisions about authorization and supervision, and I know from experience that it's a different skill set. So I just don't know how they come up with that conclusion. Presumably it means more recruitment into ESMA.
Quite possibly, or maybe a practical solution to that is that ESMA actually, I suppose, delegate back to the National Competent Authority where you have the existing skill set and expertise in exactly this space. That to me would seem quite practical, but look, again, like the earlier discussion, let's see how this evolves.
It's a long way to go on this one.
It's a long way to go on this one, for sure. Yeah.
Well, part of the ESA review is around, improving supervisory convergence. And I saw something in the FT this week which I thought was a good example of there being convergence. It was a piece on the BaFin, the German regulator, and their approach to Brexit. And it was about the number of German banks number of banks that were looking to relocate to Germany as a result of Brexit. And in the piece, it was Felix Hufeld, who's the head of BaFin, I think. He said, we're not a marketing agency and not interested in doing industrial policy. So their position was neutral on whether firms moved to Germany or not. That resonates a lot and sounds a lot like what the Central Bank has said about Brexit.
That's fair, actually. We have always been very focused on, in the first instance, I suppose, the rigour and thoroughness of our approach to looking at new applications as they come down the line, but very much supportive of a strong culture of supervisory convergence right across Europe. We wanted a situation, if you're to operate as a true single market, that there was no regulatory arbitrage creeping into the assessment and review of firms seeking to locate or seeking to establish operations in Europe, because obviously it's really important to ensure that that any migration of firms doesn't lead itself to a more fragmented or disjointed system. So supervisory convergence is core to that actually working really well. And I think we're beginning to see evidence of where that does work well. As you said yourself, there's an alignment of thought, at least with the Germans and ourselves in that front.
And on Brexit, what are you guys seeing? Is there a lot of interest coming through? Is it?
Yeah, actually, I think in the start of last year, there was a large number of what I would call maybe exploratory queries and assessments being made of our jurisdiction and the regulatory regime. What we're actually beginning to see towards the end of last year, there's quite a large uptake in new applications that are landing on our desks. They tend to be in the space of new MiFID firms, and we're also seeing quite a lot of the Supermanco, or the management company that can actually act for both UCITS and AIFs, which is quite a popular vehicle. So there's quite a number, and our authorization staff are quite busy in that space assessing and reviewing applications. I think the uptake is many times previous years new activity or new business.
So it's real, the departure of business from the UK outside.
It's very real, and I'm sure my colleagues are in the office today even assessing, looking at applications. It's that real is what I would say to you. Now, there'll always be a certain amount of firms that are probably slower in their decision making process and decide perhaps to leave things to later on this year. And I think one of the key messages I would say is really important to make your decision on whatever you want to do in terms of either a new business activity in a new jurisdiction or seeking to relocate. But to engage with the regulator early is really important on this as well. The year will fly, to be honest.
And let's assume we get to the end of the year and we have a good idea what Brexit means, which if we don't, we're in trouble because March 2019 is the date. I think that the challenge then is we don't have the UK around the table when we go to meetings in Europe, be it ESMA or the other European supervisory authorities, or be it other areas altogether, agriculture or whatever. So it is going to be a challenge for us to build bridges and build relationships to help to exert influence and have the Irish position put forward and supported. That sounds like a lot of getting on planes and meetings and engagement at EU level. Is that?
It is fair. I think we've always benefited from having the UK around the table with us, not least from an English-speaking jurisdiction, a similar legal framework and regime to ours, like a common law structure. But I would say that we have very good working relationships already with existing European regulators and conduct and regulators is the right way of phrasing it. And I suppose through supervisory convergence, through attendance at meetings, we have built up those relationships. In my mind, the most important thing now is actually to turn those into more practical relationships, so that you're in the stage of discussions and engagement that actually lends itself to perhaps picking up the phone and contacting your counterpart in France or in Germany or in Luxembourg or wherever, and that you make it a little bit more, I suppose, a live supervisory dialogue as opposed to a more formal supervisory dialogue. I think that's kind of critical, to be honest with you. I think it's also critical that the central bank continues to influence and participate quite actively around that European table, and that it is very much strong in terms of putting forward its position, and it's very much focused on what is the right outcome, not at a national level per se, but what is the right European outcome here? What is the right outcome to protect investors irrespective of where they are located? I think that's really critical.
Yeah, it's about turning up to these meetings, turning up well prepared, being on top of the brief and having a position that's strong and well argued and credible. So an even more demanding job for the regulator into the future.
Absolutely.
And domestically then, what's the main things you guys will be sort of thinking
focusing
about this
on
year?
It's a little early to say because planning is very much underway at the moment, but we have signalled towards the end of last year some of the areas of focus that we will be looking at in terms of thematic inspection. We have restructured, so our thematic team will look at more than just funds, but from a funds context, I think it's no secret I have communicated openly around our focus on operational effectiveness and how that is bedding down within the management company structures and how it's actually being applied in practice. So that's something that we're certainly going to focus on for next year. We're very cognizant also of developments from an outsourcing perspective. We're going to look at innovation and financial innovation particularly, because that's no longer a theory either. That's very much operational in practice, not alone in the funds industry, but right across financial services. You're seeing innovations through new technology, through distributed ledger, through blockchain, whatever it is that actually assists and facilitates the firm's engagement and interaction from a reporting context, or even their engagement and interaction with their own client base. So we're very cognizant of, I suppose, a lot of different things that are coming down the track.
So lots on.
Lots on is the fairest way of saying
lots
it.
On.
Yeah.
Okay. So to sort of wrap up then, for what we can maybe expect in 2018, it's more around consolidation, review, assessing whether the things we have work well and what might need to change. So it sounds quite positive. Let's see. Maybe we meet up again at the end of the year and see if this is how it plays out, or whether this was...
Happy to do that.
So let's wrap it up there and bring the podcast to a close. I want to thank very much Grainne for joining me, and thank you for listening, and we'll catch you next time.
You've been listening to the Aquest Podcast. For information about our training and advisory programs or our academy, visit aquest.ie. For more resources on regs, funds, and governance, check out our YouTube channel, Daniel Lawler, RU, RQ.